Well, the strategy for 2012 is, as I said, it's focusing on asset management, investment banking. So our chairman, what he has said in his statement 2010, that we are looking to new opportunities in terms of products like funds in the GCC and the other fund in the Asia, in particular China. And we've been, studying those two markets, and we believe that going forward, we need to have a position in those two markets for us as a company and for our client as well. So we see appetite for our clients. Plus, we see also the GDP in those areas. It has some growth, and so therefore we are just going to that direction in terms of investment. And we are going to seed at the beginning those two funds from our own resources with other alliances companies. From the other side, we would like to deleverage, as you said, from any other sectors like real estate or industrial or any other sectors that we used to have in our portfolio. And it's not converting 100% from the strategy. It's part of the strategy. But as I say, the diversification will be in our core business rather than in other sectors. So we saw in the last 5 years or 6 years that there is a growth in the real estate sectors and industrial sectors. So therefore, we took some portion of that. So now it's a time for, just exit from this and focus more on, as I said, our asset management, investment banking core business. And that's what we understand, and we need to grow it and strengthen our position in this area. Plus, we have, as I said, to gain the trust for our clients by introducing new products for them, showing them that, those are products were being very well studied, supervised, and from very high quality of, experts within the organization, and to grab a part of that growth that happened in those countries. Because things, as you see, it's migrated from west to the east. So therefore, you have to be in the place where there's a growth and an opportunity to be introduced for your client. As I said, now clients has been affected, and as you see, they have no other sources to go. Like if they go to the bank and they put deposit, it's barely 1%. It's giving, so it's nothing. And at the same time, they don't want to go to the market, where the market now it's being affected directly to the market. So therefore, we have to have some products for them that it is thoroughly being studied, and we see it from our own money, just to have a seriousness of why we are selecting this area, why we are going there, because we believe that there is a growth in those two areas. And at the same time, it's an opportunity for them to invest. Let me go back to what I have said. In 2007, the market was on the peak, and most of the stocks being inflated. So KAMCO, it's one of them. That time, the 800 or 700 first, what you are talking is, it's not reflecting the real fair value of the stock and the company as well, because this is 2.5 times book value, or maybe 3 times. So that's unusual. But because the market was, regulated, and people, they think that, those prices were, let's say, too good to be true. But at least that time, people just speculating, and they don't, think about what's going to happen in the future. So that's one of the reasons, the difference, the gap between the book value and the market value. Today, to be honest, the price, as I said, is reflecting the real position of the company in terms of earnings, in terms of dividend distribution, and the profit. So the only thing that can push the price, it's not only speculation in the market, it is the performance of the company. And as I said, we've been affected like others. We stand against the wave and try to reform ourselves, or try to be patient and wait till this cycle finish. But unfortunately, it is continuing for more than it's expected. So therefore, we have to do something else, and that definitely will reflect on the positive on our stock value in the future.